Have you ever wondered if it's possible to get a student loan for an American university as an international student? Well, you're definitely not alone. Many international students face this challenge when looking for ways to fund their education in the United States. Hey everyone, welcome back to the channel. And in this video, I'm going to walk you through how to get a student loan as an international student. And we'll discuss some top lenders like College Ave and Sallie Mae to see if they offer options for international students. And if you're interested in a full review, you can find both on Sallie Mae and on College Ave down in the description below. And if at any point you decide to try either College Ave or Sallie Mae, you should use the affiliate links that I left down in the description. They won't cost you anything, and you might even get a bit of a discount, which you wouldn't be able to get if you went directly to either of their websites. So without further ado, let's get right into it. Okay, so a student loan for international students is essentially a loan that international students can use to fund their education in the United States. These loans often require a United States citizen as a co-signer, as the most international students do not have a credit history in the United States, which is necessary to get a loan. However, some lenders may offer loans without a co-signer if the student can demonstrate sufficient creditworthiness and income. Now, when it comes to federal student loans, unfortunately, they're not available to international students. These loans are funded by the United States government and therefore are only available to United States citizens and eligible non-citizens. And in terms of private student loans, international students do have some options here that they can choose from, but they often require a co-signer that is a U.S. citizen. Lenders like College Ave and Sallie Mae have specific criteria for approving loans for international students. That being said, let's start with College Avenue or College Ave. Generally, getting approved as an international student can be a little bit difficult if you don't have a U.S. co-signer with a strong credit history or steady income. Now, College Ave typically requires a credit-worthy co-signer for most of their loans, but they do have options for students who can demonstrate creditworthiness on their own, like I mentioned. To qualify for a loan without a co-signer at College Ave, you'll need to have a good credit score with sufficient income. They also offer a pre-qualification tool that lets you check if you might qualify without affecting your credit score. Right, so you generally can't go wrong with College Ave, which is an online student loan portal that arranges loans and provides financial services for students using a few different banks, meaning they arrange lending for you, but don't actually lend themselves. And the reason why I like them is that there is a really easy pre-qualification process right on their website that doesn't use a hard credit check that would reflect badly on your credit history, so you don't have to worry about it affecting your credit score. Then once you get pre-qualified, all the deals that you're approved for and that you can get will show up right there on the website. And only after you see your options will you go through the formal application process, which will affect your credit score. So if you type in all the information correct, you'll be able to see all your options really fast and without it negatively affecting your credit score, which, like we'll see in a moment, not all services offer. Okay, so when it comes to their website, College Ave is really easy to use and is packed with a lot of helpful information about scholarships and loan financing. They offer loans starting as low as $1,000 all the way up to covering the full cost of your tuition. They also have refinancing options if you already have student loan debt, which could help you pay less on that debt or even pay it off faster. Now, College Ave is a private lender, which means they can offer both fixed and variable rate loans. And if you don't know the difference, a fixed rate gives you predictable and unchanging monthly payments. And at College Avenue, these start at 3.89%. But a variable rate, on the other hand, changes based on market conditions. And at College Ave, they start at 5.59%. Okay. So in terms of qualifying for a loan from College Avenue, you have to be at least 16 years old. You have to have a social security number and be enrolled in an eligible school. For undergrads and international students, you also need to have a United States cosigner, and it doesn't take more than a few minutes to check if you qualify and what rates you can get. Then you'll be given a choice of loans for undergrad, graduate, career, parent, or refinancing your existing student loan. You're then going to choose your loan terms and your APR or interest rate. Once your loan is approved by College Ave, they then check in with your school to confirm that you're enrolled or that you've been accepted and that the loan that you're asking for doesn't actually cost more than their cost of attendance and if you meet the school's academic progress guidelines. And lastly, if it all checks out, College Ave sends the money directly to the school itself. Now, The benefit of being financed through College Ave is that along with having pretty flexible terms, they offer a number of ways you can save on how much you pay on the lifetime total of the loan, starting off with making minimum payments while you're still studying. If you're able to make minimum payments while you study, it shows them that you take your responsibility for paying back your loan seriously, and therefore they reward you by lowering your interest terms by a bit. Also, you have the option of paying the interest charges each month while you're still in school, or you can pay a flat rate of $25 a month. On the other hand, you can go for a deferred payment where you don't make any payments until after you finish school, but you'll end up paying more interest over the lifespan of the loan. So I mentioned the fixed and variable rates, and the reason why I recommend College Ave is that they're all about students and getting you the best deal possible. They also have lower than average starting rates compared to other lenders in the industry, but their maximum rates are also much higher than averages for student loans in the industry, going up all the way to just under 18% on both variable and fixed interest rates for undergrads. But their loans are structured to help you pay off your student debt as fast as possible, so they encourage you to start paying while you're still studying, and those low starting rates are also there to help you get out of debt faster. At this point, I just want to reiterate that if you decide that you want to try out College Ave, check out the affiliate link that I left down below. It won't cost you anything, and you'll probably be eligible for a discount that you wouldn't get if you went directly to their website. Now, Sallie Mae is another player in the student loan market. They also offer loans without a cosigner, but like College Ave, it's more challenging to qualify without one. Sallie Mae considers factors such as your credit history, income, and school enrollment status. For students who can demonstrate strong credit and financial stability, Sallie Mae does provide no cosigner loans. Additionally, they have various repayment options and tools that help you manage your loan a bit more effectively. And Sallie Mae is a private student loan provider that started out as a federal student loan lender in the 70s. Nowadays, they offer both undergraduate and graduate loans, as well as loans for trade schools, and they also fund part-time and international students. Now, compared to College Ave, Sallie Mae has fewer options when it comes to repayment and even fewer choices for loan terms. And although they don't charge you any loan application fees, they don't have a pre-qualification process like College Ave does. So when you fill out their online application, it will actually reflect on your credit history. So my advice is that you do your best to check and see if you qualify before you go through the process, because you don't want it to affect your credit score negatively, right? So to apply, you'll need to give them some basic personal information and details about your school and the semesters you plan to get funded. You also need to know what your school's total cost of attendance is, which means all related expenses, including tuition, but also stuff like meals, equipment, and books, which is information you can get from the school website. And just like College Ave and a lot of other lenders, your loan can't be more than whatever your school has calculated as the total cost of attendance, which again is usually right on their website. Now, if you have a scholarship or a cosigner, you'll need to supply that information as well. However, you don't necessarily need to have a cosigner, but most students who don't have a cosigner will need the credit history needed to get a loan by themselves. But in any case, even if you can get approved without one, having a cosigner can get you lower interest rates. So it's worth checking out if a parent or other adult with a good credit history would be willing to cosign for you. Okay, so once you filled in all the details, Sallie Mae will give you a document called a loan application solicitation disclosure, with a pretty detailed breakdown of the rates, terms, and repayment plans that apply to you in your situation. If it works for you and you decide to go ahead, then Sallie Mae works directly with your school to disperse the funds right to them. Now, when it comes to loan terms, Sallie Mae has fewer options than College Ave. They offer either 10 or 15 years for undergrad and career training loans, 15 years for MBA, law, and graduate school loans, and up to 20 years for medical or dental school loans. Their minimum loan amount is $1,000, and the maximum is 100% of your school certified expenses. They also have a standard late payment fee of $25. For repayment plans, you have three choices: pay interest or a set amount of $25 a month while you're still in school and during the 6-month grace period after you finish school, or start paying after you finish studying and the grace period is up. That being said, the most important thing is the rate, and Sallie Mae offers a bunch of different rates. Because I mentioned the undergrad rates for College Avenue, let's see how Sallie Mae compares in that respect. For fixed undergrad rates, Sallie Mae starts at 3.99%, which is a bit higher than College Ave, but it goes all the way up to 15.49%, which is quite a bit lower than College Ave's highest rate of just shy of 18%. When it comes to variable rates, Sallie Mae starts at 5.37%, and their maximum rate is 15.7%, which is also quite a bit lower than College Avenue. So at the end of the day, it all depends on how you plan to pay off your student loan and what your personal needs are. In my opinion, if you want more loan options, I would definitely recommend Sallie Mae. But if you want more repayment options and more choices for loan terms, you should probably go with College Avenue. Both are solid, reliable options that offer some of the best rates in the business. Okay, so that's all for this review. If you found this video helpful or interesting, give it a thumbs up and subscribe to see more videos like this. And as I mentioned earlier, if you do decide that you want to give either of these two lenders a try, check out the links that are down in the description. They don't cost you anything, and you'll probably be eligible for a bit of a discount, which you wouldn't find directly on their website. As always, I enjoy hearing your thoughts, and I'll try to get back to any questions or comments you leave down below as fast as I can. And finally, guys, thanks so much for taking the time to watch this video, and I will see you in the next one.